All right, there we are. Let me get started right away. Microphone is ready to go. I'm gonna charge up my earbuds. Question is where they are. Here, in my pocket, of course. Like always. We have news coming up in 5 minutes. GDP news. See how that impacts price. We had a pretty good London session this morning. Let me actually... Two new mentions. Yep, that's all good. Live streams and start the live stream for. Turn off the volume here. New York live stream. This is only accessible for the VIP members. See them join in soon. Go live. Hey Ryan, welcome back. And while we're at it, open the chat and put that to my second monitor here. All right, there we go. Make that a bit smaller. Hey Vanbert. Google Chrome. All right. And let's open up TradingView. This is pretty crazy. This morning during London, we traded ES and we took a few executions, but the main ones, well, ended up getting chopped up here. I can talk about it quickly here, which trades I took before we get the news in 4 minutes. So right off the bat, here at 2 a.m., we had a little market structure shift going below. Let me zoom in here. That's how I looked at price action, not knowing what's about to come. Hindsight is a beautiful, thing. So I entered one contract short right here on this bearish fair value gap and one at the high because the stop loss was super small at 1.5 points. My take profit target was basically a 2-to-1 risk to reward ratio and the Asia session low. That's why I entered with 2 contracts here. We never get that close to the Asia session low before the London Open. That's when I decided to move my stops to break even, and I got stopped out right here in this entry and stopped out right here. So this ended up being a break-even trade. Then it looked like holding support on the VWAP, bounce off these equal lows, might not want to take them, close back above the midnight to now use this fair value gap as support. So I entered again right here on this fair value gap after I saw the nice wick rejection, but I have been stopped out for 1.5 points in drawdown on this candle. Then trying to go short of this bearish fair value gap. Well, the next candle at 335 said no to that, and I got stopped out for a 2-point stop. So all up, I was down break even 1.5, 2 points, 3.5 points. And then, I saw market makers showing their hands. Oh, sorry, guys. Had to sneeze here. And entered on this volume imbalance for the continuation setup. I liked it. I was ready to add another contract right here on the unicorn setup breaker block. If you're wondering what the unicorn setup is, now we have some time to explain. Right here, looking at the bigger picture market structure, we come from a low, form a higher high, form a higher low, or this here, this lower low, higher low and lower high is all internal between this high and this low, form a higher high, a higher low, and a higher high right here. This would be the higher high. Then we came back down to break the most recent higher low and break back above it. And that's that unicorn model. That's why I was happy entering already on the volume imbalance, and we can see how perfectly to the tick this has been respected. Didn't close below that. We swept this low one last time. This was a 15-minute fair value gap right here. We tapped the 15-minute fair value gap and moved away from that again. For the continuation higher, me taking my profit right at the previous day's high. Afterwards, we kept on respecting our bullish inefficiencies that we have left behind. Bounced perfectly off that old high. Then we made another push into our outline draw and liquidity. Initially, the previous day's high. And once we hit that and saw, okay, we're still holding support, we were looking at the previous week's high here at 4,580 to potentially be our draw on liquidity. We had this bullish fair value gap here to use as support, and right here we just went sideways and consolidated for straight 2 hours almost until we got our relief at 650 during the macro. 655 we finally hit our previous week's high, volume imbalance, bullish fair value gap, and we continue another leg higher, go sideways for a little and expand another time to the upside. And here's our news candle. Right now we're inside. Let me zoom out here. So if I hide all these drawings here quickly. Now, first of all, what I want to say, this is our Asia range, our Asia consolidation box. If I would draw that in from left to right, you can see consolidation range until we broke out. And from here, we started to 1 push, 2 push, consolidation, 3rd push. But that's what led me to measure the Asia session range from high to low. And 4 standard deviations lines up perfectly with buy side liquidity. Let me go to the 15-minute time frame now. That equal high buy side has already been taken, so I can get rid of that. Let me go to the left. So here on the 15-minute time frame, this is the only high that we have available before we hit our monthly buy side objective at 4596.75. This is that last buy side before we reach it. And then I also outlined that last 15-minute bearish fair value gap, looking for something on the higher time frame, because if we go to the daily here, let me zoom back and go to the 1 hour time frame. There's no fair value gap on the 1 hour, nothing on the 4 hour. We only have this daily wick, and that's what I used to measure the 50%. So I measured the wick right here and draw a line at the 50% for the daily wick consequent encouragement. And this is basically how I'm ending up with these areas. So right here we have that consequent encouragement, the 15 and 1 hour buy side liquidity at 4590.25 and a daily September buy side liquidity pool. If we take a look at NQ tapped the previous week's high, didn't go above it yet. This would be from last week Wednesday, shown from the ICT all-in-one indicator by using the previous week's high and low function. So we don't have to draw that in every time. But let's go back to the S on the 5-minute time frame and watch that news candle. Because we didn't take buy side. No, we did not, like this. Bullish fair value gap. So we already closed above our highest bearish fair value gap before we take out this buy side potentially and our daily buy side liquidity pool on the 15-minute time frame. If I would go all the way back to its origin, we also hit -4 standard deviations. That's usually where we see some sort of a short-term pullback. The question in play is if we take out this monthly buy side liquidity right here. That's only 6 points. Like, if you think that's unrealistic, I'd kindly ask you to think again. I think that's going to be our draw on liquidity for the New York AM session. We're going to leave that behind very likely. Let me go back all the way to the origin of this fair value gap. This could take a while. There we are. See if we have anything on the 5-minute time frame here. Yeah, this 15-minute fair value gap does a pretty good job at covering this 5-minute fair value gap. This is our buy side liquidity, and here we just consolidated. All right, current price action. Zoom in. What else would be interesting? We have London and Asia sell side liquidity below here. My executions are not important for the London session, so we're gonna hide them for now. Perfect price delivery to the tick 4 standard deviations of our Asia range. Great manipulation. Well, we didn't actually see manipulation because ES didn't go below the Asia session low, while NQ actually did. Right here, Asia session low. And Asia session low. Right here. That has been cleared on NQ, and then we had our market structure shift to the upside. Wherever you want to draw it, Asia session high, we closed above all these areas, left behind a nice and clean 15-minute fair value gap, paired with the midnight level, paired with the order block, for a decent run to the upside. Previous week's high, almost 100 points on NQ. That's where we entered into our trade, just to target the obvious draw on liquidity. What's going to happen afterwards, it's always easy to claim something in hindsight, but if you do it live, not so easy. That only happens, or you only improve that over time with enough executions. Alright, we close back below the 50% of our 15-minute. Market structure shift for me. Well, rejection wick to the upside, close below our bullish fair value gap, so we immediately turn it to an inversion fair value gap. Check it out on a 1-minute time frame. Whipsaw wick right here. A 1-minute bearish fair value gap, equal lows that have already been cleared. Now I'm gonna follow it on a 5-minute time frame. It's been working out so far very well from my entry of this volume imbalance. 16 points. That's not bad for a pre-New York Open session. Let me take a look at the current low of the day. Actually use the ICT All-in-One Indicator to show me the power of 3 candle. There we go. Pretty bullish candle. So measured from the low. Five three low right here. Is that match? Yep. All the way to the high. Nah, wrong tool. Well, I guess could even be using a box for this one right here. I want to know where the 50% level comes in at. 0.25 is the high, one tick above. Damn it. Alright, so that should be working now. Where's that 50% level coming in at for the current daily candle? Make it a thick red line so we can actually see it. That's the 50% level. And if we take a look at potential sell side to stop out some of these longs who have their stops above each and every of these higher lows, equal higher lows, higher low, higher low, higher low. Can simply use that and drag it out as sell side liquidity. That would be my main objective. Also lines up nicely with the VWAP. Equal low, discount sell side liquidity. Discount, I'm using the percentage sign for that. That would be my main target here. If we grab a pre-New York Open short here. Below daily wick CE, inversion fair value gap, 6 points. That's looking pretty nice. The 50% comes in perfectly at this level as well. And just because we retrace here, taking out some stops, what are we actually doing here? there's not much liquidity available in terms of traders that are in the market right now to be taken up here, up here, up here. That happened 2 or 3 weeks ago, or basically that's September buy side. We're now almost in December. So keeping that in consideration, where's the money at right now? I like to ask myself that question. Well, inventory is long. Money is placed, or the stops are being placed below each and every higher low. So by running it, those longs have to sell back into the hands of the market maker, looking for a fair price valuation to buy up some more before taking it up into the premium. That's what I'm looking for. Feel free to share with me what you're looking for. So GDP news, we already passed that. 15-minute time frame inside a 15-minute fair value gap. 1-minute time frame didn't fill any inefficiencies just yet. 5-minute time frame. I have a hard time. Well, sometimes if I have a hard time deciding if it's a break of structure or not, I turn on the indicator. No break in structure yet. So in looking at the marketplace in this way, it really makes sense to me why we're moving into specific areas. I would say it's 75% ICT, 10% thinking like a market maker, and 5% common sense. And then the other percentages is it's simply using general confluence, like where's the money at? But I would put that into the category of thinking like a market maker, where's the money at? Where can we stop out people? Looking at classical charting patterns like we did yesterday with the head and shoulder setup. Understanding where retail is being trapped. Yeah, all that's kind of stuff. So I'm also not afraid to draw trend lines here. Has been tapped 1, 2, 3, and now for the 4th time. So that's pretty cool. Let's take a look at EU. EU once again hit our bearish value gap that Volker was talking about earlier this morning. Didn't hit the 2-to-1 yet, but it might be about to. Take a look at NQ, retracing. Question is, are we just going to get another bounce off the trend line to take out buy side? Are we actually going to pick up some stops now prior to the New York Open and then immediately shoot to the upside? Good morning, Marley. Or good afternoon. Or good evening, or good night. Whatever it is. Let me open up YouTube here quickly. 9 viewers, let's go. Make sure to bump up those likes. That's what I want to see afterwards for ES after we pick up some stops. So let's keep going at it. That's Orbiter. That's done. Feel free to share your thoughts and ideas with me here in the YouTube chat, or share it on Discord inside the general chat. 8:40, 9 a.m. Let's see. Let's wait and see. Be patient. Getting short right now, I'd say it's a little bit too early. Don't have the confirmations that I want to take a short just yet. The gut feeling is there, but yeah, that's about all that's there. I like to have my gut feeling mixed with analysis, backing it up. And right now there's, in my opinion, bouncing off the consequent encouragement of a bullish fair value gap, bouncing off the trend line. I know it's just a trend line. ICT doesn't use a trend line, blah, blah, blah. I do. Not much reason to believe that we're gonna immediately see that drop lower. Just here observing, warming up before New York opens up. And yeah, see how we go. Only if we get a really nice opportunity, like an A+ setup, then we actually engage prior to the 9:30 open. So right here, you see this fair value gap. This is what traders refer to a balanced price range, a BPR. You might have seen that on Twitter somewhere. We have a bullish fair value gap, and we cut right through that and leave behind a bearish fair value gap right here. So this would be the bearish fair value gap. This is the bullish fair value gap. So we label this as a balanced price range. And what else is it lining up with nicely? Well, with the consequent encouragement of our 15-minute bearish fair value gap. So we could be looking for potential resistance here. Let's make this a, let's leave it purple, call it a BPR. Make it 12 big. And see how we continue. We understand where the money is at. We've already spoken about that. Below each and every high or low. We have our equal low sell side, perfectly aligned with the VWAP. We hit 4 standard deviations from the Asia session range, so that's also a good confluence why we could reject from here. But just entering before we at least close below the trend line, 50% of this bullish fair value gap. Well, the risk to the upside, it's not extreme. And knowing myself and my gut feeling, it likely will also play out and sell off and I get in at a worse price, but I actually prefer that. So if you're really keen on shorts, I'd suggest you to try to get in on a fair value gap, because with a fair value gap, we have the great opportunity to manage our risk very well, because yeah, if we see the close above the balanced price range or the fair value gap, we can immediately close our trade. So what I would do, I might actually take it. What's there to lose? Market structure shift bearish. Let's just label it as a break in structure. Put it in the middle. So if we get our fill here, I'm going to create a limit order. Stop loss at the high, target 10 points equal low sell side. If we get the fill. So the next most important variable or constant would be time. Exactly. 9 a.m. Right now it's 8:45, so this is a new 15-minute candle, starting a new 15-minute cycle consisting out of 3 5-minute candles. Number 1, number 2, number 3. And then we get a new 15-minute candle once at 8:55 a.m. 5-minute candle has closed, with a new 15-minute cycle and a new hourly candle. 2 more 15-minute candles away from the New York Open. And the way I would manage this trade is if I see, let's say, one of the next 2 candles close above this fair value gap, I'm going to get out of the trade. It's as simple as that. As long as we respect it, I have no reason to believe that we're going to go above this wick. We could also, the way ICT often did it in his trade recordings, place the stop loss above the consequent encouragement of this wick. So let's use a smaller stop even. But first of all, we have to get filled and get up into this area. We also have a 1 minute bearish fair value gap in that area. Right now we're just going sideways. And from thinking like a market maker, what would happen if we retrace into this fair value gap? We would give potential last minute 8:30 FOMO news traders a opportunity to get out of their long positions at either break even or with a small loss. We keep that in mind. We are playing around the trend line. We really see that on the 1 minute time frame. Make it look like we're gonna bounce from here and then fail. Something market makers would likely do, but just pure speculation. What's up, Weez? Sees. First time joining your stream, looks good. Building up sell side nicely. The 1 minute seems to have made the bearish displacement. I agree. It seems to have made that displacement. We have a bearish fair value gap right here. Breaker block would be... I know this price action in here is kind of tricky to label anything as a sure breaker block. I like the 5 minute here more with the short-term low broken with a higher low to the left, higher low to the right. We would label this as our breaker block right here, even though it's pretty far away from our break-in structure, but get the idea. I want to use the 5 minute balanced price range as a potential entry, building up sell side equal lows before actually collapsing. Like I said, making it look one last time as if we're gonna bounce. I'm anticipating the opposite. Can be wrong, like always. There are no 99, there are no sure shots with trading. You find the perfect 2022 setup and it still can fail. The question is what you do afterwards, how you handle the loss. 4586 limit, 15-minute consequent encouragement. Nice. Yeah, feel free to ask any questions. We don't really have lots of interaction in the YouTube top chat or live stream chat. Am I actually? Oh yeah, I thought I'm still in the waiting screen. That would have surprised me. But yeah, we get the idea. During London sessions, I also stream live, but only on Discord with the VIP members or the live stream pass members right here. We took a couple of trades. You can show that. Nothing to hide. Not perfect. But yeah, we took a potential sweep of the Asia session high. Market structure shift with an interpretation of a displacement for a 2 AM run into the Asia session low, or at least equal low sell side. Entered with 2 contracts at the low and the high of the fair value gap. Didn't happen before, or didn't get filled before the London Open at these equal lows or the Asia session low, and got stopped out at break even. So didn't lose anything on that. Then I tried to play this inversion fair value gap after seemingly closing above that, bouncing off the midnight level, trying to get in on that, but I got stopped out for 1.5 points right here. Stop loss right here, 1 tick below this low. And then I entered short of the bearish fair value gap, trying to target the Asia session low. But well, also that didn't play out, so I'm down 3.5 points at that point in time. Already, yeah, lacking my confidence in myself basically, and I have all that journaled, my emotional state and well-being, and I really had a hard time trusting this after taking 2 losses in a row, but I decided to enter anyway based on the volume imbalance. One last time we swept the low, filled the 15-minute bullish fair value gap here, and continued this entire rally. My draw on liquidity was simply the previous day's high, and I took my profit right there, ending up the day so far in $25 in profit on the funded account. Once we saw we're actually moving through that with momentum and still respecting bullish order flow, we looked at the previous week's high, this red line from the ICT All-in-One indicator, as our next potential draw on liquidity. We went sideways for 2 hours straight until we started to expand again. And that's where we're at right now. At AM opened up, continued to push, hit 4 standard deviations of our Asia session range, hit 15-minute and 1 hour buy side liquidity, but didn't clear it, didn't take it out. This is our highest 15-minute bearish fair value gap, also overlapping nicely with a 5-minute bearish fair value gap before we take this buy side. And then my overall draw on liquidity after, that's just my idea of what could happen today after moving below the 50%, the equilibrium of the entire daily range, looking at the power of 3 candle, 50%, sweep sell side below 50%, let the longs that still didn't take profit yet, that might be targeting that monthly buy side, pay for the long. So what happens, they're long right now. For them to get out, they have to sell. And if someone's selling, someone else is buying and scooping all those positions up, accumulating more longs. We also have the VWAP lining up nicely with that level to have a early New York session to the swing to the downside, 9:30 open. Whatever happens here, it's unpredictable, maybe a market structure shift and move to the upside, because we're only 10 points away from our monthly draw on liquidity. If we take a look at NQ, we also have that previous week's high still sitting here. We didn't sweep that. We have perfect equal highs waiting for us up here. So we will see how that plays out. But same story here. Potential run on stops measured from the low of the day to the high, 50%. Sweep some sell side, pick up stops of all the late longs. If we take a look at this entire range right here and make more and more sense out of it, our entire volume profile for the day. Majority of the volume obviously has been put in place down here during the accumulation phase. Same goes for NQ. Then we had another high volume node right around this consolidation. Couple of inefficiencies in between, also lack in volume. Not really a particularly strong high in terms of volume. But we can argue that the majority of the traders that didn't catch the breakout, like right at the bottom, or the total soup after sweeping the Asia session low, likely got in somewhere around here, based on the volume node, or right here at the high. And the idea is for them to be put in margin trouble or liquidate them, run their stops before picking them up, and then moving back above the equal highs. That's just my thinking here. Same story goes for the high volume node correlating with consolidation. Next high volume node, well, not really consolidation, but also not expansion. And then another high volume node right here at the peak. For FOMO traders that didn't get in, well, only a small amount of volume has been transacted right here where I got in on the volume imbalance right over here, paired with the 15-minute inefficiency. Very small amount. Next batch of volume has been transacted right here at the previous day's high. Inefficiency cutting through the previous week's high, put in some more volume, chasing the long. But the majority of the inventory has been put in place from Asia. From that Asia range, SMT divergence. Hope that all makes sense. Just trying to put the puzzle together to make sense out of it. That's how I like to use ICT concepts in my daily trading and analysis. We fell short of our sell limit fill by 2 ticks. We can check out the 1-minute time frame. Now we have equal highs and equal lows. Maybe just engineering some liquidity. Let's see which side is going to be rated first. I would prefer the equal highs first and then retrace to the equal lows. Would be perfect. EU continues lower from our 15-minute breaker block setup after taking the previous week's high. And if we take a look at the daily here in the weekly outlook on EU, we've been targeting our weekly target, this daily buy side level here at the institutional level of 1.1 with a couple of zeros. We even continued higher into this daily bearish fair value gap right here. And we rejected perfectly off that consequent encouragement. And if we bring that down to our lower time frame, well, that's what happened during the Asia kill zone. We failed to make another push above this high mitigation block, continued lower during Asia, consolidated. And if we look at the bigger picture, 15 minute, this is what one of our members, Volker, took out buy side and previous day's high, reject from a higher time frame, point of interest, the daily bearish fair value gap, shift structure, leave behind a inefficiency, plus breaker block, being this down closing candle, tap it, and maybe form the high of the week. Not sure yet. Potential is there. Low of the week is coming in right here, Monday. Buy side of the curve, sell side of the curve. Potentially, nothing confirmed yet. Thanks, trading view. We open up with another bullish volume imbalance. So let's see, maybe we get lucky and get filled on the balanced price range. What's the time? It's 9 AM, so that's the new hourly candle. So we could also be looking at potential time distortion, where we get our displacement 8:35, and then we just stall and pause and basically do nothing for the next 15 to 20 minutes before we get the new hourly momentum candle to continue the trend. Unfortunately, without giving us the balanced price range entry, fell short by 2 ticks. Now we took these equal lows, we broke the trend line. Let's see how we continue here. Maybe we can flip this bullish fair value gap into a inversion fair value gap. Let me grab this volume imbalance. Good morning, Christopher. Eric Escobar. NQ and ES had a slight bullish divergence last night. Yeah, the London session SilverBullet took off. We looked at that on the 15-minute time frame. Slight bullish divergence. NQ took out the Asia session low, while ES did not. Shifted structure right here. Once we took out the Asia buy side, bullish market structure shift, we could even use this high or this high right here as our market structure shift. We even confirmed it with a strong bullish candle close. Nice displacement coming off the low of the day or from important previous session liquidity. Leave behind a 15-minute inefficiency on both charts. And then we just took off, like you said. Luckily, got in right here on that volume imbalance to recover the 2 losses that I took during the Asia early London session chop until we eventually started the expansion. So right here, that's the SMT divergence. Bullish for NQ. And we prefer to trade so if you are open-minded and you trade both ES and NQ, depending on which one presents a better setup, then you would want to execute on the index that actually took sell-side liquidity, because this one doesn't have another reason to get back below the Asia session low. Well, ES theoretically could still argue for it to do that. Okay, so we're filled. I don't like that we took out the lows first. 9 AM candle, so that's still the new hourly candle. We ran these stops. Let me get rid of the executions. It's just in our way. We have our balanced price range, like said. Close above is already the invalidation for me. And I end up taking a, let's say, maybe $50 to $100 loss. And that's the way, if you're watching for the first time, how I manage my risk. How I can keep my losing trades extremely small And I prefer doing that on ES because ES is super damn precise when it comes to fair value gaps. And Q is as well, but I don't see that same level of precision there. So once I see the close above, coming from equal lows, bullish fair value gap on both the 5 and 15 minute time frame, I can immediately close the trade, knowing that we're likely going to use it as support now to run this equal high buy side from the 5 and 15 minute time frame. We have the 8:30 opening as potential resistance. Let's see. So we close right at the 50% of our 15 minute bearish fair value gap. Like I said, we can use this wick, consequent encouragement, as our potential stop loss if we want to. Put it one tick above that. 4589. How much stop loss would that be from my entry? 4589. 2.5 points. Put it one tick above the consequent encouragement here. Risk 2.5. Ideally get out earlier. Let's take a look at the 1 minute time frame. We have this 1 minute bullish fair value gap. Can also take a look at that. Be my area of early invalidation. So 1 minute. Go to the 5 minute. And watch that. Five-point target before the New York Open. Down there. By 2-1. Let's see if the 1 minute fair value gap holds. If we see a strong close above that, I can use it as an early confirmation. Five, 4, 3, 2, 1. Five-minute. So I don't like to close above the 1 minute fair value gap. That might be a little bit too superstitious, but it's before the New York Open. I'm not willing to risk too much. If I see it's still holding up on the 5 minute time frame, I could still re-enter. Most of the time, when I'm being too superstitious, I'm dropping down to the 1 minute time frame to look for invalidations. Most of the time, it still ends up playing out. But yeah, I'm gonna wait for the 5 minute if it's gonna be respected or not. Small cut here. Because now this would potentially be a inversion fair value gap. And if we use this as support now to deliver higher, I made a good decision. If we see it immediately close back below on the 1 minute time frame, maybe not so much. But better safe than sorry. Save my risk for better setups. Mm-mm-mm. 30 seconds to go on the 1 minute and 1.5 minutes to go on the 5 minute. Bullish fair value gap below here. We swept sell side, shifted structure to the upside, paired with a bullish fair value gap. We want to see this fail. I'd say I want to see this fail at least before I'd consider to take another long. Let's wait for this 5 minute candle to close. Take a look at the 15. See if we have any questions on YouTube. Nope, nothing new. 16 viewers. Any questions on Discord? Nope, not either. 44 seconds to go, last minute of this 5 minute candle. So let's watch that on the 1 minute time frame. Maybe we use this 1 minute inversion now as support. That's the question. And Q also looking pretty bullish. Yes, back above the 830 level. EU hit our 2 to 1. "17 seconds to go. Two, one. Wait for the new candle. Okay, we closed back below our 1 minute. On the 5 minute, we kept respecting that 50% level. So let's just see how that goes. Get rid of our 1 minute since we haven't seen that being respected. Now we have a new 1 minute bullish down here. 5 minutes, sorry. A little bit too superstitious. I'm gonna write that into my notes that, well, I guess that would end up me being afraid to lose. If we're really being honest. To close out once I see the 1 minute invalidation, while I should have really waited for the 5 minute to show me its hand. If we wanna, go above the balance price range or not. Early exit. 9:10, so that's gonna be a new 15-minute candle right here, 1 minute time frame. No, this volume imbalance. I knew it. I knew it the second I closed the position. That I'm being too damn precise, dropping it down to the 1 minute time frame. Nah. Let's put that into the journal right away. Hashtag 1 short. 1 mini. Superstitious. Or too careful. One minute fair value gap has been entirely filled in. I'm talking about this bullish one right here. I know everything's purple, blue, red right here. Might not be for the beginner ICT student, but for someone that already spent some time studying ICT concepts, that should all make sense. I guess that bounce from these equal lows into the balanced price range and then seeing the continuation just tipped me off, and then I managed to drop down on the 1 minute, and then my fear found a confirmation to exit the position with the close above the 1 minute right here, close back above the 830. And once you have that fear, it's very easy for you to find a reasoning to exit early, to be scared. That's what just happened to me. The most important thing is that you write that down somewhere, at least in your journal, where you, like, I don't know, take screenshot of your executions, or simply on a blank piece of paper. Entry, exit. Unnecessary, but well, it happened. Equal low sell side cleared. Break in structure. 1 minute bullish fair value gap. What's the time? It's 9:14, so next 15-minute candle coming in less than 10 seconds. Volume imbalance on the 5 and 15-minute time frame. That would be great. I would really like that confluence if I'm still in that short. But we already discussed that. I hope someone might still is watching the stream. I'm not going to chase this in here. Never give up back. Down. Good morning. Remember the wicks do the damage, but the bodies tell the narrative. Yeah, exactly. Raphael, I 100% agree. I'm repeating that over and over here again on the stream. The issue is that I know wicks do the damage. I framed my setup based on a 5-minute time frame. The mistake I have made here live is that I switched on to the 1 minute and saw that, yeah, correlating fair value gap here on the 1 minute, and I see the close above. That already, yeah, at this point in time with that little bit of fear inside of me that we might, yeah, that I might hit the stop, blah, blah, blah. It's really in hindsight, of course, that fear always seems super silly, but we have to understand that why we're in the trade, why we feel this way, and yeah, actually notice it. So yeah, my mistake was switching down to the 1 minute instead of staying on my 5-minute time frame where I framed and took the entry from, waiting for the confirmation. The close would have never happened above here. And if you remember at the beginning, before I took this trade, I was talking about, well, only if we close above here, I'm going to get out of the trade. But I threw away this plan, went to the 1 minute, and decided to use the 1 minute as invalidation or not. And that's my mistake. $15-minute time frame, bearish volume imbalance, that's ideal. Like, no, already hesitating for too long. That volume imbalance could be another potential entry. Check out the 1 minute time frame for the potential close below the fair value gap. Mm -mm -mm. 15 minutes before the New York Open. Our narrative is playing out. Double top formation, M pattern. Make it look like we bounce off it one more time. Yeah, damn it, threw me off. Time to journal before I make another silly mistake. Where are we at? Right here. Short 1 mini of BPR. 5-minute time frame. Filled after taking 5-minute equal lows. All right, what else? So I got filled after taking 5-minute equal lows. We short 1 mini entry of this area. What else do I want to add in here or have to? Mistake. Switched to 1 minute. Using the 1 minute fair value gap as, let's call it an excuse to get out of the short, or basically the uncomfortable position that we have put ourselves in. If we want to translate it into something that's more relevant psychologically, using 1 minute fair value gap as an excuse to get out. Signs of fear. Clearly stated before taking entry. To only exit if we close above BPR for a small loss. All right, trade number 1, journaled. Let me get rid of this right here. This is our 1 minute. Well, the opportunity is still there now with a bearish fair value gap in here. And an inversion fair value gap right here. Well, it's pretty damn close to the New York Open. Yes, with equal highs at the previous week's high. Not 100% confident in taking another try short down further. I would be fine moving my stop to around break even if I would still be in on that balanced price range entry. Taking a lower entry, I really don't want to put that down into my journal, even if it works out. Let's take a look at the 1 minute time frame here. Let's use this 1 minute. Let's see how we do. Can live with that. 50% of the 5 minute fair value gap. Stop loss right at this high, 2-point stop. Below the trend line. Not that the trend line plays any significance, it's just a nice to have confluence. One more tick. This time I'm gonna stick to the 5 minute, no matter what. Only if I see the close above the bearish fair value gap, I'm actually gonna get out. We're tapped in. 1 minute left on the clock. Inversion fair value gap, we're pushing above. No, I'm not switching down to the 1 minute now. Let's stick to the 5. For the New York Open, target 9.5. VWAP. Take a look at our bigger picture. We're almost about to migrate the volume point of control to the high of the day right now. Okay, nice rejection. Touched the balance price range again, rejected off the 50%. Yeah, I understand that completely. For S&T, need fair value gap to resist also if volume has made strong confluence for the bearish run. Nice, I like your thinking here. We think alike. When the market runs overnight to confuse us, big manipulation. Morning, I watch your videos on funded trading. What is the difference between managed groups and Tradeaway and Apex Trade Copier from their investing website? Good question. Let me answer that here quickly. So with the trade copier from apextraderinvesting.com, comparing that to the Tradeaway inbuilt trade copier, we could say, where we create certain groups. We still, so with the Tradeaway copier, we have to execute in Tradeaway. So that's a possibility, but I don't like executing inside Tradeaway. I like my executions on TradingView. And yeah, it's just another way, I say, to achieve the same thing. Get NinjaTrader. So you could do the same thing, of course, also with the Tradeaway trade copier. There's no difference in that, basically. You can also set the risk, I think, with the Tradeaway trade copier accordingly to your account size. Yeah, so there's basically no difference. You're just using a trade copier on NinjaTrader instead of using the inbuilt trade copier from apexinvesting.com. And with the, okay, we're stopped here, right at the high. I'd say worth the try. Pre-New York Open, a little bit risky, but let's actually see where we're at. 146. Matchable. Hashtag 2 short. 1 mini. That's my biggest flaw most of the time, that I'm getting chopped up in consolidation too often. But if we trend, I also manage to, like, that's the thing, like keeping my losses small, relatively speaking to my wins. Short 1 mini. Bearish fair value gap. 5-minute time frame. At the CE. Wicks doing the damage. Part 2. Yeah, just the unwillingness to risk more than 2 points prior to the New York Open. I'd say trying to be a little bit too precise. Like with the previous loss. Biggest flaw I have to work on. But, well, the only way to get better is by making mistakes, journaling them, and yeah, getting better, I'd say. Back to our entry. Oh, god damn it. So last 1 minute before the New York Open. CE entry. Stop at buy side liquidity. Klammer short-term high. ran the stop and rejected. -2 points. So New York Open in 10 seconds. Let's see. Gut feeling was right. Risk management and execution, not so much. Okay, New York opened up. Let's see. Let's hope I'm wrong and we not continue lower and take out the buy side first. Would feel good at least. Instead of seeing it dropping now, after still respecting the bearish value gap, wicks doing the damage. From my entry, my usual stop loss is 2.5 points. Yeah, we would have missed that by 1 tick. Rejected -2 points. Let's wait for the outcome of the 930 candle first and see how that is being delivered. And that entry before, I ended up losing. Let me journal that already before. Okay. 4586, exit at 4587, 1 point and a quarter, so -1 point and a quarter. New York kill zone. Gut feeling. Into sell side below 50% of the daily range. And I'm literally just writing all these things out on a piece of paper that I have laying next to me. My college blog, we could say. Because yeah, you can do this all in hindsight after you took your trades, but you could maybe gonna miss some things like the exact mistake that you did, and I don't know. I've done it long enough without journaling, and since I've been doing it, writing it out, it really feels good. It feels like a little receipt of your work, what you actually did throughout the trading day, that you can really read through like a little book on the weekend. And then what I usually do is I have another piece of paper and I try to, like for example, a football coach would analyze the performance of his team, looking at mistakes and then knowing what he has to implement in the next training session. And that's what I'm kind of doing here, of course, not playing football or any sport, just a mental game basically. And yeah, by not writing those things down, it's hard for me to to find out what my most common mistakes were during a trading week, what I can do better for the next trading week. Should all make sense, hopefully. I know I felt the same way. It's kind of a pain in the ass, but it's worth the reward. Really trying to force myself to put the effort in. Having a very detailed journal. And therefore I'm just using a piece of paper. To get your trading stats, your PL, blah, 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 you can simply use Rhythmic or TraderWeight. It always displays that to you. Log into traderweight.com, go on your stats and you see all that, but you don't see the important stuff, like what made you taking the exit here, the manual exit, what made you taking the entry here. Bearish value gap, CE, stop at buy solution short-term high. Let's mark up the 9:30 open. 9:30 a.m. New York open. Run high of day. All right. Let me use the indicator here quickly to visualize the regular trading hours opening gap. Should be pretty big. All the way from here, sorry, all the way down to Asia sell side. So this is our regular trading hours opening gap. That's where we closed the regular trading hours session yesterday at 4 p.m. right here. And this is where the new candle opens up. So like we said, daily buy side target, where are you? Right here. That's our draw on liquidity. We took out the equal high buy side liquidity to the left. We talked about it at the beginning of the stream. I'm not gonna talk about that 10 times where I got these levels from. Maybe later at the end of the stream to recap everything, but yeah, I just used the ICT concepts as confluence, the trend line and stuff like that, to trying to imagine what retail traders are likely looking at. My trades are based on ICT concepts, and like I said, 75% ICT concepts, 10% thinking like market maker, blah blah blah. And then yeah, just other confluences aligned with that, basically. Trying to be as open-minded as I can. I like to use trend lines because they often signal the opportunity for a low resistance liquidity run, where we simply walk up the stairs like this. Slowly, we have a nice trend line aligned with all that. Get our market structure shift, bum, low resistance liquidity run. Because we understand that stops are all the way below here, below each and every higher low. They are long, and if they want to get out of their long, they have to sell. And what's happening if market is already selling off and there's more people selling their old long positions now? Well, that's just fueling the short even more. Visualizing that with a trend line, I think there's nothing wrong with that. No, I'm taking this as a paper trade, not gonna engage too quickly. Just seeing or interested to see if we're gonna hold support on our highest bullish share value gap to deliver into our draw on liquidity. Usually going for a 2.5 point stop, but also understanding that we have more fair value gaps below. We kept respecting the fair value gap down here, not respecting this one. You get the idea. So not giving other traders an opportunity to get in down low, the target buy side. Just looking for the highest fair value gap to hold support. And now also our 15-minute inversion. That's usually how I play these. 2.5 point stop. On the 1 minute time frame. Bullish share value gap holding support, bullish share value gap holding support. 1 minute time frame, railroad tracks. Now I'm just gonna sit and watch here, but this would be the obvious monthly draw on liquidity. Can see that NQ also popped above our previous week's high with a regular trading hours opening gap of roughly the same size. I'm gonna try it. If we remain in this bullish order flow and continue with the momentum of the 9:30 open, I should be right. If not, I take a little loss. Five minute is going to close right here and there. Let's see, 1 minute. There we go. New 5 minute candle. A new 5 minute bullish value gap. Stop loss inside the 5 minute bullish. I don't really like that. Momentum doesn't seem to be continuing right away. We have our draw on liquidity. Wider stop loss, 5 points. Maybe add something on the 5 minute. Give it some more room to breathe this time. Consequent encouragement. Black line. I'm gonna give this one a little bit more room to breathe, put it back down to the balanced price range, and add another contract if we retrace further. The volume point of control migrated on ES only. Let's put that to the 9:30 open and also on NQ. Yep. Volume point of control now up here. Let me put on some music. And please tell me if you hear the music as well during the London live stream recording. People were able to hear the music in the background, but there shouldn't be any. So guys watching on YouTube, let me know if you hear music too. The MSS market structure shifted and hold. I think it's because lack of displacement. Price seems to want to fill the higher time frame buy side liquidity. Yeah, I think it wants to fill that first too, definitely, before then taking internal, moving from external liquidity back to internal. We have monthly, daily buy side liquidity above, not far above, which right now is being framed as my draw on liquidity here. Can see EU is also pushing back inside of the range. Look at NQ and ES at the same time. We get a new 15-minute candle very soon. 5, 1. Just be patient. See what we get. The only way we could lose on this setup without taking like exits too early, in my opinion, would be if we have a fake pump to the upside, engineer some buy side liquidity and retrace first, and do some kind of whipsawing, taking out highs, taking out lows before we take monthly buy side, engineering some more liquidity, because we really haven't taken much sell side on this entire move to the upside yet. One 5 minute candle is gonna close soon. I'm gonna wait for the close first. We filled the bullish value gap. Let's put that back to where it belongs to measure the 50% of our daily range. If we close above 4589.75, we also have a 15-minute inversion fair value gap. 5, 4, 3, 2, 1, and we close above. So we could label this, if we go to our 15-minute time frame here on ES, go all the way to the left here to that September buy side as an inversion fair value gap now. Just lining up the confluence, hit the 50%. See how that plays out. Take profit one tick above that monthly buy side pool. 9:45. Checking out the 15-minute. Didn't close above the buy side, but closed above. Let me find it. That highest 15-minute fair value gap. We don't have a fair value gap on the 1 hour, on the 4 hour, on the 10-minute, only on the 15 and 5. And that's, yeah, portrayed by this fair value gap. So we can now actually make it purple and label it as a inversion fair value gap. Maybe change the opacity a little bit. Yeah, that's better. Go back to the 5-minute time frame. Change the label. Inversion. Yeah, lack of displacement, I'd say. Being too optimistic that we're gonna retrace first. Do you guys hear the music on YouTube? I don't think so, otherwise someone would have already complained. 18 viewers, let's go. At the same time. We're growing, guys. That's awesome. One-minute bullish fair value gap. Took out the low. See if the momentum wants to continue. I'm taking a quick mental break to go to the bathroom. I will be back in no time. Mental break. Perfect. That's what I like to see after my mental break. No, sometimes it just feels good leaving the charts, even if it's just for a couple of seconds or 2 or 3 minutes. Going for a quick walk outside around the house. Refreshing. That's what I like to call that. All right. Yeah, I used to see YM as part of the SMT discussion, Christopher. Lately, like you say, there's no point in comparing YM to NQ and ES. I've been looking at it. I'm fine with just using NQ as a tool to use SMT divergence. I don't think I need a third one. That would just make it harder because one has an SMT, the other one doesn't. I'm only focusing on ES anyway, only executing on ES. So there's no real benefit to me having a third chart to compare it to. like here on NQ, like if I had YM here. But if you are like open-minded and you trade ES and NQ and YM, depending on which one presents the best setup, well, then that might make sense. I also don't use the DXY for SMT divergence for the future indices. I don't think it's really helpful, but that's just my opinion. If you think it is, fuck what I say and stick to your plan. I think it works really well when trading Euro US dollar futures. They really move hand in hand. But yeah, using it for index futures, not so much. So we took out the high, formed a higher low, leaving behind no fair value gap right here on the 1 minute. So let's see how we trade through this. 15 minute, formed a higher high. Slide SMT because NQ didn't make that higher high. We finally get some activity. Awesome. Good morning or good afternoon, Volker. Did you end up to take profit at your 2-to-1 on EU? I still have it on my chart. Looked at it. It's the only fair value gap I can work with, so I'm gonna use it. We closed above and we used it as support. Didn't leave behind any new fair value gap. This could also be a potential displacement. If we close below here and then run lower, well, we have to get there first. Fair enough, but well done. Nice trade. Well spotted. Well spotted. That's for sure. Bigger picture. Not losing track of that. Let's see. Ideally, I would be a big fan of this volume imbalance to be left behind open without filling it in. A nice pin bar with a rejection wick to the downside and ideally no wick to the upside. This is just my wish list. But I like to, yeah, have these specific things that I'd like to see while the candle is still forming. That helps me just to, yeah, follow my plan. Not like I followed my plan in here. And that's very typical for me. That's my biggest like holdback. And I think it's not bad for me to like speak about my biggest issues that I have or that I face in trading. Well, at least I show all my executions and don't hide any of that. But we can see that same or the similarity between me taking trades prior to the breakout today at least, and then I'm ending up roughly at break even. The same thing is going to happen if this trade plays out and we're going to hit our buy side target, because yeah, I took 2 trades right in here, netting around $150 loss. Then I took the long right here of this volume imbalance into previous day's high with the easy draw liquidity, doing the same thing here basically with the daily September buy side, monthly liquidity, also just ending up back at break even. But there's no issue for me if I end up at break even. I still consider it as a good trading day. If you might look at your PL calendar, if you use a journaling software like I do with BentoBook, You might look at your PL history and you're like, I didn't make money on this day. Must have been a bad day. But even on a day where you like close in red, let's say, for example, this day right here, Tuesday, initially you would assume that wasn't a very good trading day because you lost. But, well, as traders, or at least by now, we should understand that, like, how much profit we make and how much we potentially lose on a trading day doesn't say anything about our level of perfection or executions, if you know what I mean. Like, if we rank, for example, our trading days in A game, B game, C game would be making dozens of rookie mistakes, over trading and doing all the common mistakes, repetitive. A game would be flawless trading day without any execution mistakes, very precise entries, followed your plan, no emotions involved, or at least being able to manage your emotions, ranking it in sort of into the system. I'm working with the developer of Bentabook to implement orders in here, but it's a work in progress. He's part of the Accumulation Zone community, and we, do it one step at a time. 5-point target. Once we tick above our monthly buy-side liquidity pool, and what do we see once again? A volume imbalance. And there we go. Take profit target hit. A monthly, weekly, daily draw on liquidity hit. So, well, usually I would say there's not much more left for us to do. If we switch over here to our daily time frame, comparing both yes and NQ, we now finally, by using contract adjusted chart or simply the ES set contract, we took out this monthly buy side. We just wicked it, but counts. Right now, let me actually pull up the daily analysis, and I'm done for now. Put all that stuff into group number 1, hide group number 1, switch to the daily, and turn on my main daily analysis. September highs, we took them. Fair value gap daily, so we hit that daily bearish fair value gap here. Weekly, we have a weekly bearish fair value gap here as well. If we pop it up to the weekly bearish fair value gap, we rejected from that before. Now we took out this high, so let's see what happens. If we end this month basically on, well, let's go to the daily. The monthly candle is going to close on Thursday, so tomorrow is going to be the last trading day for the month. Then we enter December. Yeah, it's already December. Crazy. But yeah, so far, if we look at the monthly, we looked at that on our weekly outlook with the VIP members. We've seen the biggest monthly expansion in the entire year of 2023. Not sure about 2022, I didn't check that. But in terms of a point range, we swept the low. New monthly candle opened up 1st of November, and we pushed. On NQ, that's even more. Like on NQ, we're already above the July buy side right here. But on ES, we're lagging behind a little bit, but we get the idea. Very bullish monthly candle. So tomorrow could be a potential, thank God it's the end of the month setup, where we look for a power of 3 high of the week setup on Thursday for a potential wick being created. I hope that makes sense. On the monthly candle after taking monthly buy side, those September highs. The same way as we do it on Friday by looking at the weekly candle. The weekly candle right now is looking also very bullish right here. And on Friday at the end of the week, we could do that at the end of the month as well, or at the end of the day, where we look for a retracement back into the range if the entire day has been very bullish. An classic, typical expansion day to the upside. We look for a reversal setup, whatever it might be, at the high of the day to potentially get in on a short for, basically that higher wick. We have been in this expansion every time we've been at the high of the day. Of course, it's not easy to tell we're at the high of the day, but towards the end of the day, during the PM session, seeing a reversal setup most of the time always played out here in our favor. We keep on going, putting in higher highs and higher lows on the weekly time frame. That's the 1, 2, 3, 4, 5th week in a row now. Daily time frame, keep on pushing. Crazy. And I think it's good to keep up with the monthly, weekly, and daily time frame. That's why we do it on a weekly basis every Sunday with all the VIP members. Yeah, we're trading it every day, and I think it doesn't hurt to have a bigger picture understanding of what's happening with the assets that we're trading. Can't hurt. We might not use it every day because we're still scalping the 1 and 5 minute time frame, and I'm really not considering myself as a swing trader, but we get the idea behind all that. Where's that trend line coming from? Put it in here. And turn on our intraday analysis again and our ICT all-in-one indicator. We caught the top. If I turn on the executions, to the tick. Unfortunately, messing it up for myself before the New York Open, but ending up the day in $100 profit. So let's take a broad screenshot of all this stuff here and put it into Bento Book. Now I'm going to export my trader weight later on. Might not be done for the day yet. We'll see. But the main objective has been hit. Initially we wanted to see a retracement below the 50% at the beginning of the stream. And I anticipated that with those two short entries right here. But yeah, keeping my losing trades small, not allowing them to take me out with a 5-point stop using mini contracts, targeting equal low sell side, roughly around the 50% of our entire daily range. That would have made sense to me to use that as a Tudor swing to move to the upside, but we didn't need the Tudor swing apparently, and just continued further to the upside immediately with the New York Open. We realized that, and that based on a 1 minute bullish fair value gap. Where did we enter on? Right here. This highest 1 minute bullish fair value gap, giving it some room to breathe. Afterwards we saw the 5 minute, and I was super close on placing my second buy limit order right here. But if I would have done that, I would have exposed myself to too much risk for my liking, for my daily loss limit, after already taking 2 cuts. If I would have avoided that and only looked for entries after 9:30, well, then I would have been in with 2 contracts here, one at the 50% and one at my 1 minute entry, whatever it might be, looking for 5 points on both contracts, 10 points, $500, done. Not a bad salary. But yeah, like I said, that's the biggest issue that I'm currently working with. I wouldn't really say filtering out bad trades, but no, I don't like to say it like that, filtering out bad trades. All of the trades that I take have a potential, might just be the wrong time, and the way I manage my risk, I keep my losing trades very small without giving them much room to breathe, and my winning trades, yeah, usually around 5 to 10 points. Sometimes 15 if I have high conviction, or I think my biggest one was 25 points on ES. During the most recent memory I have, 25 points. But that doesn't matter, it's nothing to show off. Alright, 5 minute time frame. We took out liquidity pool. Perfect exit here. 1 tick above. This would be our potential 5 minute market structure shift bearish. On the 1 minute time frame, yeah, we could use that same thing here. Formed a higher low, failed to make a higher high. Let's take a look at NQ here. 5 minute time frame. Come on, we still have that regular trading hours opening gap to fill. And by the looks of it, we have SMT divergence going on. Do you guys see that? Higher high on ES, lower high on NQ, lower highs on NQ. Bearish SMT divergence here at the highs. I'm going to wait for my 5-minute market structure shift, fair value gap entry to target shorts and sell side. Now that we hit the monthly objective with a decent sized displacement. Yeah, that's what I'm looking for. Hope that makes sense. And I would take another entry after that. But I want to see confirmation first. No reason to rush. Of course, we could simply drop here and take out all the sell side quickly after trapping traders long, thinking we continue higher. We know better, but yeah, I don't like chasing a setup or jumping in with a market order. We have our breaker block, we have our fair value gap. That's literally all we need. Sometimes price is just running away from us, like right now. But that's really up to, yeah, the trader himself, if that SMT divergence and that, I don't know, for myself, I labeled it as a FOMO entry. I don't like market orders to enter on. We haven't filled a fair value gap yet here on the 1-minute time frame. Get our market structure shift. I'm gonna wait for a setup on the 5-minute. We have a nice breaker block. Our 15-minute inversion, I'm gonna put that to the left here. Otherwise, we're just gonna have too many boxes in our way. That's our daily wick, consequent encouragement. Buy side, buy side, buy side, equal low sell side. Our 50% of the daily range. Yep, that's correct. Yep. Bullish fair value gap right here. I'm gonna leave it where it is. We're very close to the VWAP. Our regular trading hours opening gap. NQ is also shifting structure here. We have that SMT divergence. NQ already below the 9 AM lows. ES lagging behind. So just to prepare ourselves. Yeah. Breaker block. We could look either at the lowest down closing candle or at our, consecutive down closing candles. I'm going to look at the lowest one for the breaker block here. Paired with the bearish fair value gap. And this would be an inversion fair value gap if we leave it like that. So an entry around the overlapping area. I'd say I'd take an entry at the breaker block if we get the close below in 2.5 minutes. I'd be happy with that. We have the market structure shift on NQ as well for the NQ traders out there. Higher high, higher low, higher high. SMT divergence at the high. So like we said earlier, I'd prefer taking the short on the index that actually took out buy side. And that only happened on ES. On NQ we didn't do that. That's why we have the bearish SMT. And after being long for the entire day, since Asia breakout of the accumulation zone, yeah, we're now from the high of the day after taking out a monthly objective, back to the VWAP, sell side below each and every one of these higher lows. Let's take a look at the 1 minute. No fair value gap entry yet. Sell side liquidity comes in right here. So I would like to see a retracement, ideally before we take sell side, or we're just gonna take off and I'm gonna be left behind. But I don't have any issues with that. I made my $100 profit for the day. I had a very good week so far already. That's up to you. I would like to know that actually, because we have more engagement than usual on our live stream. 18 current viewers, and also on Discord. My question to everyone watching this and listening right now is, what's your favorite type to enter into a trade? Is it limit orders based on, well, let's forget about the part, what it's based on, fair value gap, breaker block. But what's your ratio? Is it more market orders or limit orders? Mine right now, for the entry at least, it's, I'd say 95% limit orders I'm really trying to hold back on market orders because that's what I learned from my journaling. Every time I enter with a market order, I write that down every time. Most of the time afterwards, much more market order for me. Interesting. For me, that often leads to chasing, maybe just because I made a bad experience with it. And now I'm, well, trying to condition myself a little bit, holding back on market orders. But interesting. So guys, feel free to share that with me. So for Christopher, it's much more market order. Bearish volume imbalance. We're back below the daily consequent encouragement of our wick. I'd say we likely want to see our breaker block entry up right here at that high. That would allow that last minute FOMO longs that didn't take profit, that didn't catch the perfect high like we did here. If we look at the volume profile, most of the volume has been put in place up here. Down here, not so much. If we look at our low to high, traders trapped up in here. By moving it back into that area, theoretically, we would give, or market makers would give retail traders a opportunity to close their positions at break even, coming from the high of the day. And by doing that, yeah, they would make less money with the move to the downside. Hope that makes sense. But yeah, back to the previous week's high. Caught the perfect top. Let's check out the 1 minute time frame. No volume imbalance entries here to the downside. Well, if I hide all my drawings here, put them into group 1. There's always a reason to find an entry, or if you want to find one, you could have used, let's say, a inversion fair value gap right here. We close below, we retrace into it and continue lower. We have a inversion fair value gap up here. We close below. Yeah, we didn't really retrace back into it. Inversion fair value gap right here. We didn't respect it. We only respected the volume imbalance above. Yeah, so those two old bullish fair value gaps that have been disrespected now have been used as resistance. Inversion fair value gap or market orders to catch part of the short. Did anyone jump in short? Christopher, did you jump in short on that, on maybe a market order? Let me take a look at NASDAQ here. Yeah, NASDAQ is already deeper inside the regular trading hours opening gap, almost back below the sell side. That's why I like to keep track of my premium and discount array for the entire daily candle. And according to that, we're still in premium with around 2 points. Sell side and discount would be right here at 4579 and 45, let's call it 77. Right around the 470 levels. And we see that now. Like, I remember seeing a comment, why you have a trend line on here. Well, I spoke about why I like trend lines. We keep on going higher, and trend lines always offer an opportunity for a low resistance liquidity run. We took out our monthly buy side target. We immediately displace. Well, that's, I'd say the rest is up to you if you like to take market order entries. I don't. I want to see my retracement, but well, target, London sell side and Asia sell side liquidity. We're already below the 50%. But we get the idea. So visualizing H and Smith shorted ES. Besides a big stop loss, what would be wrong with a 15-minute breaker? Nothing. Never said anything wrong about 15-minute breaker. I guess this would be our 15-minute breaker block then here. We could still use that. besides a big stop loss. No, there's nothing wrong with that at all. Let's do that. Let's try. Daily wick consequent encouragement. Let's put that over here to the end of day. 18. Daily buy side. Get rid of our 5-minute breaker stuff. Sell side liquidity. Let's get rid of some of these drawings. Too cluttered. I can't think properly if I see too much stuff on my chart. Equal low sell side liquidity. 50% of our daily range. For our premium and discount, we hit buy side, we hit buy side, we hit our daily buy side, 15-minute inversion, fair value gap. On the 15-minute, this would be our breaker block. On the 5-minute, lines up nicely with that consolidation. Besides the bigger stop loss, nothing wrong about a 15-minute short setup if you didn't jump in on the short already yet. So yeah, breaker block. I would just have to use micros with that and target the low of the day. No, the 5-minute breaker has not been retested either at all. That would be sitting all the way up here. We could still see that happening. We now have equal lows, right? Did we sweep that? Let me actually take a look at that closer. Yeah, we swept this low, and that's the first low below the 50% of our daily range. So theoretically, we've hit sell side and discount. Just want to point that out. With that sell-off, good area to take partials at. Let's take a look at our regular trading hours opening gap and see where we're at. So either the 5 or 15-minute breaker, choose what you like most. Learn trading drawdown includes total gains even if you didn't close the trade. It was 5k in profit and 1k in drawdown on one trade and busted the account. I thought you had to close the trade before you were hit. It is live trading, not based on close. No, I know. We spoke about that like a month ago. It's live with Apex, at least. Let's see if we have any questions on YouTube. That is displacement. But never saw it. Going to be patient. Yep. So what are you guys looking for? Are we looking for the 5 or 15-minute breaker block? So with trade day, H. Smith, to answer your question here on Discord. Yeah. End of day and intraday. We said that the intraday trailing drawdown is, it's like your own shadow following you at all times. If you make profit and you don't realize it, you lose that amount of equity. So we have our 15-minute breaker block. Let me get rid of the power of free candle. Irritating. New day, blah, 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 weave up. That's okay. Previous week's high, previous day's high. Yeah, I think it's worth a try on the 15-minute here. Let's take a look at our, if we even get the retracement at all, we're just gonna have to be patient. We take the stairs up with higher lows and with only higher lows. I really want to point that out here. then we take the elevator down, or we basically cliff dive off the high. Not giving any of these longs to, I don't know, maybe they're not in front of their charts. They don't believe it. They still hope it's going to go back up. Put their stop loss further and further to the downside. That's why I like to use trend lines. Always gives me a good idea. But well, we didn't see the entry opportunity today for it. Little bits of a fake out initially prior to the 9:30 open. A pump and dump. So 15-minute breaker with a 15-point stop roughly. But we're already hitting major sell side and discount, looking at the daily range right here from the low all the way to the high. 50% coming in at 4,580. We hit those equal lows from our consolidation before we broke through the previous week's high. Let's map that out in this little box. Yeah, 15-minute breaker block or 5-minute breaker block up here. But understanding, or at least I understand it that way, that so right now the damage has already been done. All these late longs, well, like from over here, if we look at the volume profile, I like to use that as visualization. Right here, fixed range volume profile from the beginning of the day all the way to the high. Volume point of control coming in at 4,591. So that's already 11 points. We're already 11 points below that. Most of the volume has been transacted up here. That helps me to understand that right now we trapped traders long, grabbing their money. Question still is, will this remain as the high of the day or high of the week maybe? Who knows? If we retrace all the way back up into this area, we would give potential longs from up here a chance to get out at break even or at a smaller loss. So right here we have those two highest volume nodes right here paired with the 15-minute breaker block and with the 5-minute breaker block. I'd say I'm going to pick the 15 with micros and I'm going to scale in. The further we move to the upside, I'm going to risk the $100 profit I have made today. Let's take a look at NASDAQ. Hit the 50%. Well, let's see. First of all, we have to get a retracement, but that's how I like to use the volume profile to make sense out of where traders are being trapped. Don't even need that. You can just use your brain and think a little. What retail traders likely did with this trend line, uptrend. Yeah, that's what I was looking for initially. Prior to the New York Open, I know you haven't been there at that time. Right here, I was looking for shorts before we take out the daily buy side liquidity right here. We wicked it. So I label that as cleared for now at least. I wanted to see that retracement below this equal low sell side, below the 50% of this early range here of the day as a judo swing to the downside for a reversal from discount, already stopping them out. That's where the money was at prior to the New York Open before we run into buy side. But since we have now seen exactly the opposite, we run into buy side first and now we get the displacement. Well, that leads me to think that we might have no business up there anymore. And we're just going to continue to drop. Now we took those equal lows. We're back below the previous day and previous week's low. Not giving us the opportunity to get back in on the breaker. A 15-minute time frame. Nope, no retracement. But this is a decent size displacement. Yes, it has been taken. 99% sure. Monthly buy side. Month of September, 1st of September. We wicked it. Even if we go to the ES set. On ES set we didn't hit it. Interesting. But is that correct? Let me zoom out here. Well, I guess then it comes down to the question, taken or not taken, based on what chart you're watching. And I already don't like that. So on ES1, the chart I always follow, we took the September buy side. Clearly. On ES set, we didn't, even though I'm using the contract adjusting for the ES1 chart. So I wonder which one is correct. One party would argue it has been taken, the other party would argue it hasn't been taken. If we go to the 1 hour and turn contract adjustment off and go over here, we already took September buy side a long time ago, I think. Now September buy, that's July buy side, that's the all-time high. So with contract adjustment turned off, doesn't make sense. With ES1 contract adjusting on, that's how ES set is currently presented. Now, I would argue we have taken it. Definitely. September. When did we have the last contract change or switch? Let me pull that up here. Status line, events, continuous contract switch. The last time we switched was before. So the September high has been put in on the ESH contract. That's why we see that discrepancy between ES set and ES1. I follow ES1 here. We don't even have data on the ES set to reference these highs right here. If I use ES1 with the contract adjusting turned on, that's just what I use as my reference. It's up to you what you use. But if you look at the... I'm trading ES1, but the contract behind ES1 right now is the ES set. But to look at the bigger picture, I use ES1 and also to get my liquidity from that higher from ES1, because that September high was formed in the ESH or ESU contract. I don't remember our last contract. Let's see. Yeah, from ESU over to ESZ on the 8th of September. The high of September was formed on the 1st of September. That was still during ESU. And that data isn't portrayed exactly to the tick on the ESZ contract. That's why I'm using it. Yeah, I don't know. I guess that's where opinions go in different ways. I'd label it as taken. I mean, we ticked it, wicked it, and we sort of move away from it very aggressively. If I look at ESZ, we wouldn't have taken that, and then we just reversed. Without taking, it makes more sense for me that we have wicked it and then saw the immediate rejection. That's why I'm going to stick to ES1 for my higher time frame targets and bigger picture analysis. To look for my levels. Let's see if we have some other opinions here on Discord. On YouTube. Nope. That's a very confusing topic. So we took out sell side and discount. entry of the breaker on the 15. The 15-minute candle should offer us a, yeah, that's going to close in 30 seconds. 30 more minutes during the early AM session until 11 AM. That's usually my trading window. But, well, that's the displacement. So question to the community, everyone that's watching. Do you agree with me with the statement that we took out monthly buy side? Did we or didn't we? What do you use as your bigger picture chart? So now we have a bearish fair value gap here on the 15, paired with our breaker block. Yeah, NQ is not super far away from, well, it's on a weekly. 50 points away from taking out the yearly high. Right here from the 17th of July. Took out that September buy side long time ago. 3 weeks ago, basically. But I opened this not to look at NQ. I wanted to open it to pull up MES. Mm, 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 mm. 4596.75, 4597.0. So even on MES, we took out that high. Using the continuous contract, look at that buy side, and the contract adjustment turned on. If we turn it off, we've already passed that level last week, and there's no point in arguing. I'd say there's no right and wrong in the end of the day. I've spoken to so many traders. Like, do they have it turned off? Do they have it turned on? And actually, like, even influencers on Twitter, I'm in good contact with most of them, and yeah, I just asked them that question, and they're like, ah, okay, that's why everyone was looking for, where was it? Contract adjustment on the daily. If I turn it off, yeah, right here, that was the case. That was during August. Here, with it turned off, we took out buy side and then continued down. With it turned on, we never took that buy side and we continued lower. Same goes for ES, and yeah, that just confused the shit out of people, and they all said, now, I've been trading with it turned on the entire time. Some people say they have been trading with it turned off the entire time. Don't want to get too deep into that down into that rabbit hole, so who cares? The potential is always there for us to be wrong, and that we just swept sell side below the 50% of our daily range right here to continue up higher, maybe during the PM session. I would have preferred an entry up higher, to be really honest. But 15-minute bearish fair value breaker block starting at 4582.75. So let me set up my trade. Target the Asia session sell side. 1 micro would already be $71. Risk, we have the VWAP, we have the, what else do we have around that area? $4582, the consequent encouragement of the daily wick. Yeah, not sure yet, haven't made the decision mentally if I want to take that trade or not. Let's take a look at the NQ daily range, dealing range, from low to high. 50%, we're already way below that. Rejected off that level once again, about to hit the lower quarter of our entire daily range without giving a good entry opportunity. Maybe on the 1 minute time frame, I haven't checked the 1 minute. We had the SMT divergence right here, bearish fair value gap entry, yeah, but without proper confirmation yet. The first structure shift, I'd say, happened right here, and from here on we just sold off immediately into that sell side. And afterwards, yeah, we started to slow down a little bit. But unless you market order entry into that, no way you would have gotten into that short with a limit order. All right, we have our regular trading hours opening gap. Like always, we have two scenarios. Take sell side in a discount, bounce after filling parts of the regular trading hours opening gap in, and continue higher. Pick up some stops, engage even more liquidity by going higher first before making a fake out move to the downside. To get the entire retail section long, hunt their stops without even giving them a good chance to catch the short on both ES and NQ. So now all of them are likely looking for the short, while in the end of the day, market makers are slowly accumulating here. After picking up all these buyers, to get out of their positions, they have to sell, use a sell stop or a sell limit, sell stop to get out of a long. If someone is selling, the market makers are buying up these positions. Their job is to hedge, and yeah, they're holding that now with a even bigger long position than before. And where would be the area where they could sell it back at a profit, roughly around this area. So the interest for them would be there to take it up higher, but well, then basically no 2022 model would work. The only thing that I don't like is that we hit the 50% of our regular trading hours opening gap. We hit sell side below the 50%. We're inside this volume area high. Well, the potential is there. Like I said, two scenarios. We retrace, reject off our breaker area, and continue into the low of the day. And fulfill the 2022 setup here on the 5 and 15 minute time frame. Or yeah, we use it as a trap to know full retail traders or even ICT retail traders to only look for shorts while they're accumulating the longs. Let's see, there's always two sides to each story when it comes to trading. So far we didn't retrace into the breaker block. Let's look at ES on a 1 minute time frame. This is starting to range now. We already had we could see that ranging to continue until, I don't know, the PM session before we take out London and Asia sell side. That would be a very aggressive AM session in my opinion, but it could happen. I've seen that before. 50%. Oh, we just range around that 50%. Take out the lows, take out the highs. A good example for what I mean. Let's see if I can find it. No, not here, not here. Like right here, we take out the previous week's high, the high of the week. We get our displacement here on a 5 minute time frame. But all we ended up doing is pick up sell side below the 50%. move into the lower half of our daily PD array, below the 50%. Hunt stops right here and right here. No need to retrace any further. At the same time, we're looking for shorts of the breaker block, bearish share value gap, which, like, at least on this trading day, never happened to play out. We saw the 9:30 open pump into buy side, followed by an immediate dump without giving us a good entry opportunity. Only on the 1 minute time frame up here. I remember that last week Wednesday. Then we just chop, forcing all the traders that wanted to take the short from here. They can't hold overnight trading futures. Eventually, I think it might have played out and hit sell side liquidity, but not nicely. We don't want to stay in a trade for 1, 2, 3 days until profit or sell side is hit with a huge stop loss. And yeah, right now, today at least, I just want to show it, the opposite side of what could happen if we do not continue into that sell side, if we remain bullish. But right now we just consolidate, and I'm fine with that. I'm in profit for the day. I caught the long into the draw on liquidity. We spotted the SMT divergence while it was happening. Even before we saw that drop, we saw this 5 minute and 1 minute candle form, and we've been looking at the market structure shift here. If that's enough for you after taking monthly buy side and seeing SMT divergence to get in on a short like H and Smith did with a market order, well then, fucking good job. Take your profit and close your charts. Done for the day. No need to sit around here to wait for a potential re-entry that could still fail. The big move has happened for the AM session, in my opinion. We trapped longs. We stopped out all these longs with the immediate dump into sell side below the 50% of our daily range. It's objective 1 and 2 cleared. Scratch that off the board. Usually what we see after that, more often than not, I'd say, let's say at least 6 or 5 times out of 10, maybe even more, the consolidation. Retracement during the PM session, and then, yeah, don't want to say 50-50, don't know the probabilities, so I would have to lie. Depends on, yeah, market makers, what they want to do. The only thing we know for certain is that they picked up stops. That's for sure. That longs have been stopped out just by looking at the volume profile. What you want to do with that information is totally up to you. The easy trade came in right here of our bullish share value gap into our monthly target. We got filled to the tick at the high of the day at 4597. Nice 5 points after getting chopped around here prior to the New York Open. That's not so good, but yeah, we get the idea. If we continue to sell off, the next target I'd be looking for would be sell side and the midnight level. See what happens on the midnight, but if we're already down here without giving us a retracement entry, yeah, simply look forward to target London and Asia sell side, and if that's hit, close your charts. 1 minute time frame, retraced, bearish fair value gap, but yeah, we're losing momentum here. Let's see, I'm gonna stick around for the 10:50 to 11:10 macro. Gonna answer some questions on YouTube and Discord if there are any. Otherwise, yeah, I'm gonna call it a session. Can see that also the amount of viewers, we're dipping. Let's see if we get a retracement, breaker block entry to dip further. We have equal lows left behind. Take a look at NQ. NQ made higher lows. We seem to be bouncing off that 50% regular trading hours opening gap right now. Marley, cool. Volker, you're gonna take that 2022 setup. You're gonna leave it for the day. H. Smith, I think you already took the short with the market entry. Let's ask the people on YouTube. Christopher, are you gonna take the 15 or 5-minute breakup block entry for the continuation lower? C's, are you gonna take that breakup block after that displacement? Let me know. Interesting to know. And if you don't, also why you wouldn't take that. Let me check my emails if Ninja Trader already responded to my request. Block Apex Trader funding. No, not yet. It's almost 6 hours ago from now. Well, we'll see. I'm in no rush to set up that trade copy yet. 5-minute time frame. Consolidation down low. Nothing new on the chat. We leave these wicks to the downside. So right now, if I'd be looking for anything, would be a retracement long entry. Maybe something on a 1-minute time frame like we did on last week, Thursday, Friday. I'm not sure, don't remember. I have to look into my journal. Saw something similar where we used a inversion fair value gap, or I used the inversion fair value gap to go long after we had one last stop hunt, taking out the equal lows as support, targeting the VWAP and a 5-point target. But for me, the AM session is done. I'm gonna contemplate if I'm gonna take the 15-minute 2022 setup. I haven't made that decision yet. Looks pretty clean. If we're being honest, it's worth the risk. So yeah, unless there are any more questions, I'm gonna end the stream here, take my dog for a walk, and yeah, be content with enough. $100 in profit over the entire day today. lesson for the day personally would be try to avoid chop as good as I can. If it wouldn't have been for the chop, I would have been up $500 for today. Got chopped up twice here during London and twice here during New York. Repetitive pattern. Should be able to spot these and avoid these. That's my lesson for the day. I'm gonna start journaling now, and now first take my dog for a walk, get some fresh air in, and then start to journal. See if I keep everyone on Discord up to date, if I take the model or not. But it really shouldn't make a difference if I take it or not take it. If you like the setup and you manage the risk well, doesn't make a difference if I'm in or not. If you like it, take it. If you don't, if you already hit your profit target for the day, then leave it. If you're in drawdown for the day, well, use smaller risk. Oh yeah, do whatever you want. Do whatever you think will work. But in the end of the day, it's all about you managing your risk wisely. So using minis on that. Possible if you cut your risk early on, you enter on a breaker and you expect it to not continue higher than the breaker block. Let's say like here and the fair value gap. But tricky. So I would suggest using a micro for that. Now we see the retracement, it's 10:45, a new 15-minute candle. Consolidation down low. Yeah, I'm gonna end the stream here. I gotta go outside and then look at it. Maybe after. Maybe I missed the opportunity, but I don't mind. Profit for the day. Can't complain. See if we have any last minute questions on YouTube. Nope. Alright guys, so thanks very much for joining in today. I think we had a great stream. Lots of interaction. I really appreciate that. 15 likes, let's go. So yeah, like I said, thanks very much for joining in. I will be back tomorrow for the New York session live stream and for the London session live stream on Discord with our VIP members. We still have the 50% VIP sale going on and also 50% off for the ICT all-in-one indicator. The link for that is in the description down here. You can check that out, or yeah, simply join our free Discord section and ask me questions. So I sometimes even open up the Discord live stream for free. But right now I'm focusing on YouTube. So it's going to be interesting. I'm going to leave the trade like this before I place a potential micro limit. See what's happening inside the breaker block. Maybe a 1 minute 2022 setup inside the bigger picture. 15-minute 2022 setup. We will see. But I'm calling it a session for now. Alright guys, take care and enjoy the rest of your day. Bye.